Okay, welcome everybody. Thank you for taking time out of your day to join us. Today, as part of the quarantine broadcast, I have a guest speaker today, Bill Studebaker. Bill is President and Chief Investment Officer with ROBO Global. So, Bill, thank you for coming.
Good to be here, Shiraz. Happy to talk to you and about our conviction in robotics and AI.
Awesome. So, Bill, really love to get a little bit of background on both yourself and actually ROBO Global in general, a little bit about your firm.
So ROBO Global is a index advisory company that's focused exclusively on the disruptions and innovations that are happening in robotics, artificial intelligence, and healthcare innovation. And believe it or not, 8 years ago, we founded the company with the belief, anticipation that robotics and AI were become ubiquitous applications. Fast forward, 8 years later, we couldn't be more convicted in terms of what's happening. I mean, robotics and AI are changing the way we live everywhere. Okay, not just in the U.S. and Canada, but globally. Robotics and AI are technologies that are being infused into everyone's lives, and so it's a pretty exciting time to be an investor.
Awesome. No, I appreciate that. And honestly, I think you guys have been totally on trend. So, on that sort of theme globally, AI, machine learning, it's kind of a little bit of an arms race between sort of the West and the East. So, maybe tell me a little bit about where you see the world and where the most impressive developments are coming from. And are there any firms, for example, that do come to mind?
Well, I think we have a full-blown robotics and AI arms race going on. It's happening definitely between U.S. and Asia. And the U.S. was fortunate, I would say, years ago to have adopted technology called Kiva Systems, which is Amazon Robotics, that allows us to get product not inside of days, but soon to be inside of hours. Okay, when you were talking about fulfillment, people want it, right away. Okay, so the technologies that are needed now. Okay, and so we have a undisputable arms race going on in e-commerce. We have it going on in artificial intelligence. It's going on globally, and particularly within China. Okay, China is investing upwards of $150 billion the next few years on creating AI infrastructure in their economy. Okay, and so it's really important that we focus on this because this is going to change how we live and work. And it's happening again, not just in North America, but it's happening globally. This is a technological revolution that's going to change the way we live and work.
Awesome. So, in your H-Tech ETF, which is one of your healthcare technology and innovation products, your team focuses on a bunch of sectors from DNA sequencing to 3D printing and implants for wearable medical devices and genetic cancer therapies. So, my question to you is, which sectors within this space do you see the largest opportunities for growth and investment?
When you look at healthcare, this is arguably probably one of the most pronounced areas within all of industries that's going to change. I mean, the way we live now, it's sick care. Okay, we contract disease or chronic illness, we respond to it after it happens. Okay, we're in the front end of the biggest change in the history of humanity, where essentially we're improving healthcare, we're lowering costs, and we're extending human longevity. Okay, what we've had in the past is sick care. We're going to a world of prediction, prevention, and individualizing medicine. So there is a convergence of robotics and machine learning and life sciences that's creating a breakthrough innovation. So there isn't one area to exclusively focus on. When you look at healthcare as an industry, it's an industry that's probably only a couple percent digitized or penetrated. So this is going on for years or decades. Our kids that are born now are not going to live until they're 70 or 80. Kids that are born now are going to live till 100, 120 plus, because we've got the ability not just to arrest the signs of aging, but reverse it. So this is a pivotal time in humanity, and it's a pretty exciting time to be an investor. And you have to be invested in healthcare.
Excellent. Well, I couldn't agree more. So, sort of switching gears a little bit. So, getting into wearable robotics, from prosthetics to exoskeletons, I mean, the trend is extremely explosive. So, it's almost borderline cost prohibitive for a lot of consumers. So, in your opinion, what really needs to happen in this space in order to make it more affordable for your everyday layperson?
Well, there has to be reimbursement. So Amazon and others are working on reimbursement for healthcare. Okay, when you think about the costs and the benefits or the costs of providing a wheelchair entrance and exit for people, it's really hard, expensive. Okay, but we're getting to a point now where robotics and AI are having a material impact on people's health, longevity, and dignity, where they can now begin to leave a house, enter a house because of prosthetics and different, opportunities are allowing them to do this. So I think that this is going to be an area that's going to, generate a lot of interest in the years ahead. Okay, right now there's not a lot of public companies that are in this space because it has been cost prohibitive. But again, with prosthetics and with exoskeletons and with reimbursement coming, I think there's going to be a lot of change, and we're adding robotics to everyone's lives. Okay, it's adding more mobility to people. It's adding, more opportunity for people that have had strokes or different, sort of issues to begin to have mobility. So I think it's a huge area. It's not a very investable area yet, but that's going to change. Okay, 3D printing was not an investable area years ago. Autonomous vehicles was not an investable area. We have a J. Crew effect where, initially the excitement sounds great, but then the cost doesn't look good, and then all of a sudden the penetration picks up, and the costs come down, the penetration accelerates, and we're going to see that across a lot of areas. And what's important about understanding what's going on now is that you have to have an exponential mindset to understand what's happening. We as investors understand sort of linear progress. Okay, if I take 10 linear steps, where am I going to be? Okay, I'm going to be, essentially, 3 feet away, 30 feet away, 10 steps. If I'm taking exponential steps, I'm going 1, 2, 4, 8, 16, 32, 64, 128, 265, et cetera. That's what's happening. And that's what's happening across medical interventions. That's what's happening across all robotics and AI.
Interesting. I couldn't agree more. So, how do you vision AI and robotics penetrating and advancing within healthcare and medical specifically? And would you say that where would be the areas or pockets where there'd be the largest opportunities?
Well, again, healthcare is arguably less than a couple percent penetrated. It's one of the least digitized industries that we were in. So there isn't an area of healthcare that can't improve, whether it's from medical diagnosis or misdiagnosis. I mean, that's a third leading cause of death is misdiagnosis. Okay, you look at medical error and billing and things like that. There is an area that can't improve. Okay, it's not about robots stealing our jobs, taking over what we're doing. It's about helping us make better decisions. Intuitive Surgical and Da Vinci started out producing surgical robotics back in the late 1980s. There's upwards of only 3,000 installations globally. They talked about recently on the last call that they put up great numbers, talking about 18% penetration growth, and in the last quarter. This is only going to extend. Why? Less than probably 5% of surgeries are done through robotic applications. Okay, that's going to change because we're in the process where we're providing better care. Okay, we're providing lower costs and better outcomes, and that's with surgical robotics. And so when you extend this throughout the value chain in healthcare, we're in the very early days, and for investors, you need to be exposed to healthcare.
Absolutely. So, I mean, on that topic, Intuitive Surgical, I mean, that's one of the larger holdings within the Robo ETF, and I know they specialize in sort of robotic systems for surgeries. A lot of them can sometimes be multiple hour surgeries, and that can be totally taxing on, the physical body of a doctor, as I'm sure you're already aware. But I guess maybe talk to me a little bit more about that company, because it is really interesting, and it's one that I think intuitively people do think more about when you think of, healthcare tech. You think of something like this, but maybe talk to us a little bit about Intuitive Surgical.
Well, Intuitive Surgical, was founded. Believe it or not, it was in the late 90s. Okay, so this just didn't happen a couple years ago. And so what they've been doing is big and disruptive. And again, we're talking about a company that's sort of put out 3,000 sort of installations globally. It's just beginning to infiltrate, healthcare. Okay, and if you looked at the analyst reports back in the late 90s, early 2000s, and so forth, you would have saw it. Not sure about the technology, not sure about the doctor's acceptance rate, not sure about the penetration, et cetera. But it's taking off. Okay, so we as physicians, like he or she, might be in their 60s. They've done a tremendous amount of surgeries over the years. They have a lot of knowledge, okay, but maybe in their 60s, they have less dexterity. When you're looking at a robot, it moves within micromillimeters of accuracy, okay? A human being can't do this. So again, when you extrapolate on the benefits of robotic applications, you're talking about lower costs and better patient outcomes, okay? Since Intuitive launched their Da Vinci system in the late 90s, early 2000s, there's now 42 companies globally that are working on different healthcare robotic applications. So I think that this is going to become much more and increasingly mainstream in many procedures that we're doing. It's going to help doctors not replace them, but help do their job better.
Excellent. No, I couldn't agree more. So I guess that leads us to a sort of a kind of a contentious subject, a little bit on the whole concept of AI and robotics. Was a lot of viewers out there know that companies from like Amazon to Google, IBM, and Microsoft are all doing work in the artificial intelligence space. And many are super excited about the space, but a lot of people have concerns that things could start to get out of control or the machines can take over. I guess what sort of thoughts or things that you can say about the space to help kind of calm people's nerves?
Well, I think for one, people talk about, robots stealing our jobs and killing us and doing all this stuff. Okay. When you look at the correlations of that, robotic applications deployment is virtually one-to-one, particularly when you look at industrial applications. So what you're seeing here, it's a collaboration with systems, okay? And there's a lot of fear with robots, what they may or may not do. The idea here, and the important part is that we as humans program the robots. So there is a bias to, what we do and how we do it. There's positives to that, and there's some negatives, and that's the negative that's going to play out in discourse through legal intervention as we go forward. But it's really important. And I think what we're going to see is there's going to be increasingly more and more collaboration. We're moving to a world of edge computing, okay, where virtually every device is connected to the internet and has knowledge and application to a environment or to a certain use case of robotics and AI that's going to help us make better decisions. So we're pretty positive about where we're going.
Excellent. So I guess, again, keeping with that sort of thematic investing concept, it's been on the rise overall in recent years. So in your opinion, what would be kind of the major benefit of gaining access through plays like the ETFs that you guys run, and also buying individual companies within the thematic space in robotics and AI?
Well, I think the important thing is looking at robotics and AI. Okay, these are enabling technologies. They're changing the way we live and work. And you think back to the internet, okay, it was amazingly disruptive. It changed how we socialize, how we consume, the internet, media, and so forth. That's it. Robotics and AI are technologies that are changing everything how we do. Okay, so it's a process of improving productivity and enabling growth. And if you look at how to access the industries historically, has been pretty hard. Wall Street does a great job of looking at things in hindsight, the rearview mirror. The important thing now as investors is look forward. Okay, what's changing and how do we get access to that? Okay, because when you look at the Wall Street geeks term, robotics, what would come up? There isn't a geeks code that brings up all the robotics companies. There's the same thing for all the AI companies. So you need to have exposure here before things change. And so for investors, the importance is having access here to the new world. 52% of the S&P 12 years ago didn't exist. So the rates of disruption are accelerating, and they're accelerating even more because companies in robotics and AI are changing business models overnight.
Excellent. So I guess sort of the bonus question will be, there's obviously been a lot of, I guess, emphasis in the space over the past year or so, and a lot of the companies and the indices have had a great run up. And we've actually seen subsequent pullbacks here at the beginning of 2021. So maybe talk to me a little bit about what you see as sort of broad strokes overall, what's happening, kind of causality in the space.
Listen, the market is very, sentiment driven. And certainly, our indices were beneficiaries of the stay-at-home trends and so forth. But if you look at Robo, the last, so the year-to-date, Robo, our flagship ETF that focuses on robotics and artificial intelligence, is basically flat this year after being up 44% last year, up 30% the prior year. Think, which is our AI index that focuses on AI companies, the enablers and those that are producing the technologies as well, is down a couple percent this year. I think it's after today, it might be down 3-4%. That's after being up 67% last year, 37% the year before. Okay. Our healthcare index is down modestly as well after being up 66% the prior year and and up 34%, the preceding year as well. So we've had, tons of growth. Nothing goes straight up. Okay. And so we design our indices to be able to take advantage of the growth, but not be overly exposed to any area or any subsectors. Generally speaking, our indices are very diversified across subsectors, across market caps, and across geographies. Okay. And so as a generalization, our top 10 names are about 15% of our dollars, maybe a little bit more, 18%, but not overly concentrated because we know that investors want a smooth ride, but we're providing them access to names across geographies that they would have a hard time, getting. And so we think that's super important in this market to be diversified, and that's what we attempt to do.
Awesome. Well, Bill, I really appreciate you taking time out of your day to have this chat with us. I know that you must be really busy down there in California. Your weather is definitely better than we got here, although it's starting to get better up here. So hopefully we'll be in a position where we could all see each other again in person, and we'd love to have you up here in person again. So thank you so much.
Sounds good. Thank you.
Awesome. Take care.